Welcome to the deep dive. Ever think about how stuff actually gets around the world? Your
Yeah.
coffee, the steel in buildings, grain.
It's quite something when you stop to consider it.
Exactly.
Yeah.
Today we're diving into a key part of that. Dry cargo chartering. It's something you asked us about, and, well, it's fundamental to global trade.
It really is. We're using the ICS Dry Cargo Chartering 2014 document as our guide here.
Yeah, it's our chart for navigating this. Get ready, it's surprisingly varied and honestly pretty fascinating.
It's much more than just ships moving goods, It's this dynamic mix of commerce, law, logistics. It all comes together.
And we're here to unpack the essentials, sort of give you the key drivers in this whole field.
Absolutely.
And guiding us through. Well, we have the insights from Andrew Lansgale, the technical editor of our source material. His experience is, well, extensive.
Yeah.
Ship owner, charterer, broker.
Operator, naval background. He's seen it from all angles in places like London, Tokyo, Hong Kong. A really broad perspective.
Definitely. So let's jump in. Why dry cargo? What makes it so, well, significant?
I think the first thing that hits you is just the sheer breadth of it, the variety of goods. Huge amounts of iron ore, coal, grains, things the world absolutely relies on.
Right. It's not some small niche.
Not at all. And it's a sector that's constantly had to adapt and grow with global needs. It keeps evolving.
And the source makes this interesting point about the skills involved. It suggests that, if you're thinking about careers in finance, law, commerce, trading, management.
Dry cargo shipping kind of pulls elements from all of them. It's very integrated.
So it combines accountancy, law, trade, management.
Precisely. You're handling complex contracts, big financial deals, the logistics of moving commodities, managing the ships themselves. It's a holistic business, really.
And it has deep historical roots, too, doesn't it?
Oh, absolutely. One of the oldest forms of trade. Constantly changing, yes, but the fundamentals go way back.
Okay, so a massive, diverse, historically crucial industry. Who are the main people involved? The key players?
Well, at the heart of it, you got the ship owners. They provide the vessels.
The asset holders.
Then you have the charterers. They're the ones who need to hire the ships to move their cargo.
Got it. The renters, essentially.
And linking them together, crucially, are the brokers.
Ah, the brokers. The matchmakers. The source mentions they have different roles.
Yeah, they do. A broker might focus on finding the right ship, the tonnage, as it's called, the capacity for a specific cargo.
Or the other way around.
Exactly. Finding cargo for a particular ship or fleet. Some work competitively across the whole market, non-exclusively. Others might work exclusively for an owner or a charterer.
So like agents in other fields focusing on supplier demand.
That's a good analogy. And their job isn't just making the introduction.
Yeah.
No, the charterer's broker, for instance, often drafts the actual contract, the charter party, getting all the terms down correctly.
Right.
They handle amendments, communications between the parties. Even the financial side, like freight payments and settling accounts, they're really central to the process.
Okay, the charter party. You mentioned it. This sounds absolutely fundamental.
Yeah.
What is it exactly?
It is. It's the core contract. It lays out every single term and condition for hiring that ship. It governs the whole deal.
And the way these are put together has changed, moving from paper to electronic.
That's right. I mean, electronic communication is common now, especially in negotiations. But you still need that formal signed document, the charter party, to really seal the agreement. The written contract is still king.
And getting the details right in that document, especially about the ship itself and when it'll be ready, that's cool.
Well, absolutely essential. Any major mistake in describing the ship or its readiness, that can be a breach of contract. The charterer might even be able to cancel the whole thing.
Wow. Okay. Now, the source mentions all these standard forms. Multiform, Amwelsh, 1946, Laytime, GenCon. It's quite a list.
Yes. Those are standard, pre-printed charter party forms. They've been developed over years for different types of charters and trades.
Like templates.
Exactly. They provide a common framework, cover a lot of the standard clauses you'd expect. So you're not starting from zero every time.
So things like the NYPE forms.
Right. The New York Produce Exchange forms NYPE 46, NYPE 93. They're very common for time charters. GenCon is a big one for voyage charters.
They create a sort of common language.
Precisely. Everyone understands the basic structure, but it's very rare they're used completely unchanged. Parties will almost always add their own specific clauses, riders, side clauses, addenda, they're called, to tailor it to the exact voyage or time period, and often to keep sensitive details like the rate confidential.
Makes sense. The source also talks about different types of charter parties. Voyage, time, bareboat, and mentions contracts of affreightment and project cargoes. Can we break those down?
Sure. A voyage charter is pretty straightforward. Hire the ship for a specific journey, point A to point B, basically, for particular cargo. The owner handles the ship's running costs.
Okay. And time charter.
That's hiring the ship for a set period. The charterer decides where it goes, what cargo it carries, within agreed limits, of course. And typically the charterer pays for fuel and port costs while the owner still covers crew and maintenance.
So voyage is like a taxi ride. Time is like renting the car.
That's a decent way to put it, yeah. Then bareboat. That's basically leasing the ship itself, without crew. The charterer takes on almost all the operational responsibility, like they own it for that period.
Right. Much more involved. What about those other two contracts of affreightment and project cargoes?
A contract of affreightment, or COA, is a bit different. It's an agreement to transport a total quantity of cargo over a period, often using multiple voyages. Think of a big grain company needing to move, say, 1 million tons over a year.
So they secure the capacity without booking individual ships each time.
Exactly. It gives the carrier flexibility, too. They can use different ships to fulfill it. Project cargoes, that's more specialized. Transporting really big, awkward, high-value stuff like parts for a power plant or wind turbines requires special handling, planning.
Got it. Let's dig into these essential elements the source mentions. First, vessel description. Sounds like you need to be precise.
You really do. The charter party needs the ship's name, flag, bill year, its classification society like Lloyd's Register, part of ICS, the International Association of Classification Societies.
These societies set the technical standards.
Yes, they ensure the ship is safe, seaworthy. The contract also states the ship's speed, its capacity usually in both grain and bale figures.
Right. Grain versus bale. Remind us of the difference again.
Grain capacity is the total volume if you fill the holds with something like loose grain, which flows into every nook and cranny.
Maximum possible volume.
Pretty much. Bale capacity is slightly less. It's the space available for packaged goods, bags, pallets, things that don't pack quite so tightly.
And the source mentions cubic feet are still common even with metrics coming in.
Yeah, the market often still uses cubic feet, so knowing the conversion is important.
And the ship's draft, how deep it sits. The source mentions load line certificates.
Correct. The load line certificate shows the maximum depth a ship can be safely loaded to in different zones and seasons. It's a legal requirement, marked right on the hull. Can't trade without it.
And sometimes owners might choose a draft slightly less than the maximum allowed, for cost reasons.
That can happen. Port dues might be based on the summer load line draft. If the ship typically carries lighter cargo and never reaches that depth, registering a slightly shallower operational draft might save on port costs. It's about optimization.
Always optimizing. Okay, next element, cargo. Seems simple, just say what you're carrying. Any catches?
Oh, definitely. The contract specifies what can be carried, usually lawful merchandise, but crucially, it also lists exclusions. Dangerous goods are almost always out unless they're properly declared, packed, handled according to the IMO's Dangerous Goods Code.
Safety first.
Absolutely. And it might refer back to grain bale capacity, depending on the cargo type. Plus, cargo securing is vital, using lashing securing points called pad eyes. Modern ships need a detailed cargo securing manual showing how to do this safely.
Makes sense. Then voyage period, defining the trip or duration. Mentions of safe berths and ports, and always afloat.
Standard protective clauses for the vessel. Charterers must send the ship to places where it won't face undue risk. That's the safe berths and ports idea. Always afloat means the charterer can't order it somewhere it might ground at low tide. Common in time charters.
And there can be issues with the last voyage in a time charter if it runs over.
Yeah, if the final trip looks like it'll finish after the agreed charter period ends, there are established ways to handle that, often involving compensation if the ship is returned late.
Okay, let's talk money. Freight hire, how the owner gets paid. Different for voyage and time charters.
That's right. In a voyage charter, it's called freight, usually based on how much cargo is loaded, sometimes calculated differently. And there's dead freight.
Dead freight.
That's compensation the charterer pays if they fail to load the agreed minimum amount of cargo. You also have potential freight taxes. IMCO has guides on that.
And for time charters?
Payment is called hire, typically paid regularly, like daily, and usually in advance. Punctuality is key. Late payment can be a breach, though owners usually give notice before taking action, like withdrawing the ship.
And there's something about fuel allowances.
Yeah, often there's a negotiated lump sum deducted from the hire to cover the fuel the ship uses for its own domestic needs. Lights, heating, that sort of thing.
Interesting detail.
Okay.
Next, laytime and demurrage dispatch. This sounds like it could cause arguments.
It definitely can if it's not clear. Laytime is the agreed time allowed for loading and discharging, no extra cost to the charterer within this time.
But if they go over?
Then they pay demurrage. It's basically a penalty for keeping the ship waiting longer than agreed.
And if they finish early?
They might earn dispatch, a bonus paid by the owner for saving time.
Okay, a carrot and a stick.
Yeah.
And there are different ways to calculate this laytime. Per hatch per day, weather working days.
Yes. Per hatch per day links laytime to the loading discharging rate achievable per cargo hatch. Weather working days means time only counts if the weather allows work. Although the exact interpretation of that has evolved under English law.
What's more common now?
Days of 24 consecutive hours is seen more. It means laytime runs continuously unless there's a specific agreed interruption, weekends, holidays, bad weather stopping work, strikes, things like that.
And the statement of facts is key here.
Absolutely vital. It's the official log of what happened when in port arrival, start-stop of work, weather delays, signed by the master, agents, shipper, receiver reps. It's the basis for calculating laytime, demurrage, or dispatch.
Got it. Accurate record keeping is crucial. Next, responsibilities. Who pays for loading and unloading?
This is where terms like FIO free in-out come in. FIO means the charterer bears the cost and risk of loading and discharging. The freight rate reflects this split.
And using the ship's cranes.
The charter party specifies if the ship's gear can be used and who provides the operators, the crane men or winchmen. Also, stevedore damage caused by shore workers during unloading that needs clear allocation of responsibility.
What about cargo damage claims?
There's a widely used agreement, the Interclub New York Produce Exchange Agreement, that sets out how liability for cargo claims is typically shared between owners and time charterers.
Okay. Moving to liabilities and protections. This seems to cover bigger unexpected events.
Exactly. Managing risk, things like general average.
General average.
It's a core maritime law principle. If a sacrifice is made deliberately to save the ship and cargo from a common danger, say, jettisoning some cargo in a storm, all parties involved, ship and cargo owners, share the loss proportionally. Governed by the York-Antwerp rules.
I see. What else?
Collision clauses, like the both-to-blame collision clause, deal with fault when two ships collide. The new Jason clause ensures cargo contributes to general average even if the owner was negligent, provided the owner is protected under liability rules like Hague or Hague-Visby. War clauses cover what happens if war breaks out.
And you mentioned liability rules. Hague-Visby, Hamburg.
Yes, these international conventions set out the carrier's responsibilities and liability limits for cargo loss or damage during sea carriage. Hague and Hague-Visby are more common, generally favoring the carrier slightly more than the later Hamburg rules.
Then there are general clauses, paramount clauses, ICE clauses.
Right. A paramount clause makes sure that rules like Hague or Hague-Visby apply to the contract, even if they wouldn't automatically by law. ICE clauses deal with disruptions caused by ice preventing access to ports, outlining options for owners and charterers.
And finally, in this section, law and arbitration. Agreeing on the legal framework seems vital.
Absolutely critical. The contract nearly always specifies the governing law, often English law, and the jurisdiction for disputes. But there's a very strong preference in shipping for resolving disputes through maritime arbitration, like the LMAA in London. It's generally seen as faster, more specialized, and more commercial than going through the courts.
And the VRUL.
Ah, yes. Those are specific industry rules designed to help interpret laytime calculations consistently, trying to minimize disputes in that tricky area.
Okay, we've covered the contract itself in detail. Let's shift to the financial aspects. It's more than just the freight rate, right?
Oh, definitely. Commissions and brokerages are key. Brokers usually get a percentage of the freight, dead freight, and demurrage on voyage charters, or a percentage of the hire on time charters.
Who pays the commission?
Usually the ship owner pays it, though sometimes the charterer deducts it from the freight and pays the broker directly.
And the source mentioned freight market risks and tools like pools and the Baltic exchange indices.
Yes, the freight market is notoriously volatile. Rates go up and down based on supply and demand for ships and cargo.
So how do owners manage that risk?
Some, especially smaller owners, join pools. They put their ships into collective commercial management with others. It diversifies risk, potentially improves earnings.
And the Baltic indices, BDI.
Yeah, like the Baltic Dry Index, BDI, and tanker indices like BDTI and BCTI. They're crucial benchmarks. They show average earnings for different ship types on major routes. They indicate the market's health. its direction.
Like a stock market index, but for shipping rates.
Kind of, yeah. And there was BIFFX, the Baltic International Freight Futures Exchange, an attempt at a futures market to hedge against rate changes. These indices really highlight the market's ups and downs.
So they give a snapshot of current conditions and maybe future trends.
Exactly. And global events, financial markets, commodity prices, they feed directly into these indices and trade patterns.
The financial side also includes payment methods like letters of credit and clean bills of lading.
Yes, very important in international trade, where buyer and seller might not know each other well. A letter of credit, LC, guarantees payment to the seller if they meet the terms, which usually includes presenting a clean bill of lading.
And clean means?
It means the bill of lading confirms the cargo appeared to be in good condition when loaded. The bill of lading itself is crucial. It's a receipt, evidence of the carriage contract, and importantly, the document of title to the goods.
Right. And the left financial point, voyage estimating. Sounds like a core skill.
Absolutely fundamental. It's calculating the potential profit or loss of a specific voyage before you agree to it.
What goes into that calculation?
A lot. Voyage distance, sea time, port time, which can be tricky to predict in dry cargo fuel consumption, including extra for environmental zones like ECAs.
ECAs.
Emission control areas, under MARPOL regulations, requires cleaner, often more expensive fuel. You also factor in port costs, cargo quantity based on capacity and draft limits, bunker prices, and availability. It all feeds into the final profitability estimate. The Curlew Voyage example in the source shows how detailed it gets.
Okay, quite the calculation. Let's move to operational considerations, the practical side of things.
Exactly. The day-to-day running starts with ship's documents and classification certificates. A ship needs a whole raft of valid documents to trade legally.
Issued by
various authorities, often for the flag state, and these docs are checked constantly by port state control in every port visited, ensuring compliance with international rules.
Which brings us to flags of convenience, FOCs, often controversial.
They can be criticized for potentially lower standards sometimes, but the source makes a good point. Many well-run ships use these flags, and crucially, without so many ships registered under FOCs, it might be harder for important international safety and environmental rules from the IMO to get enough ratifications to actually come into force globally. It's a complex role they play.
That's an interesting angle. Operationally, we also have ship management and port agents.
Right. Ship management companies handle the routine running, technical, crewing, commercial insurance. Port agents are the local eyes and ears in port for the owner or charterer. They handle everything from briefing the captain on local rules to arranging pilots and tugs, dealing with authorities, and preparing that vital statement of facts.
And lastly here, a warning about fraud and unethical practices.
Yes. The source stresses being careful, meticulous documents, clear communication, and doing your homework on who you're dealing with, especially the charterer's reputation and financial stability.
So don't charter your ship to just anyone.
Basically, yes. Relying on vague assurances can lead to big problems. Due diligence is key.
Okay, final major topic, world trades and influences. Putting it all in global context.
Exactly. Shipping demand, freight rates, they're massively influenced by global events, politics, climate-affecting harvests, economic booms or busts.
And the source mentions key commodities.
Iron ore, often processed a bit before shipping. Coal, with ongoing efforts to handle it more efficiently. Grain, relying heavily on inland transport to get it to the ports. These big three drive a lot of the market.
And there are trading restrictions too, physical or political.
Both. Navigational limits like ice in winter, political issues like sanctions or embargoes, labor problems like port strikes cause huge delays, and physical limits the size of ports or canals like Panama and Suez.
They restrict the size of ships that can use certain routes.
Absolutely, which impacts routes, transit times, costs. If a charter involves passing through a canal, the contract needs clauses confirming the ship meets the requirements.
Well, this has certainly been a comprehensive deep dive. It's clearly way more complex and interconnected than it might seem from the outside.
It really is. A truly dynamic field where law, commerce, operations, global events, it all intersects constantly.
So, for you listening, we hope this walkthrough has given you a solid feel for dry cargo, chartering its vital role in moving, well, almost everything, and the intricate web of factors involved.
And maybe a final thought to leave you with. How will this industry evolve? Think about technology, environmental pressures, shifting trade patterns. what are the next challenges, the next opportunities for this age-old yet constantly changing business?
Yeah, it's something to consider. That invisible infrastructure, the ships, the contracts, the logistics that underpin